The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We're going to take a look here at the German DAX. As you can see, we are completing a really nice Gartley pattern here. Absolutely a colorful pattern, exactly at the 61% retracement. So it's very interesting. Now, if we move over to the FTSE, believe it or not, the colors are different, but the pattern is exactly the same, right at the 61% retracement with an ABCD format. That is a Gartley pattern, any way you look at it. One of the major questions overnight was, I would like to trade, but I am getting trouble from my spouse because she thinks that trading is related to gambling. Folks, trading has nothing to do with gambling at all. Gambling is a game predicated on certain rules. Once the rules start, the game completes until it is over, whether it's the toss of the ball, the throw of the coin, the spin of the wheel, the turn of the cards, the blow of the whistle, whatever it happens to be. It doesn't make any difference. The game goes through until it's over. And the odds are predicated on a situation where the house is going to win a percentage of that. Now, with trading, we have a very small opportunity cost in commissions. They're very small. I mean, fractions of what they used to be years ago. Now we play for peanuts. So it's really, not much going on there. But the main thing is that gambling, you have no control over what's going on. With trading, you have complete control of what's going on. You can decide to get in or out whenever you want. You decide what you want to trade, when you want to trade, how much you want to risk. None of those things are really apparent in gambling except the amount of risk. You can only risk the amount of money that you put up in the gambling. Whereas with futures and trading, if you do uncovered calls and uncovered puts, you open yourself up to unlimited losses. So those are the things that are different, but there's really not much that it shows anything to gambling versus speculation at all. So you're absolutely right, Marshall. You got one of the lucky ones, Marshall, so you're okay. All right. I had a really interesting email from one of our listeners from Bakersfield, California. She was listening to my story about Dennis Reagan and the artificial intelligence, and she went online to the newspaper there and pulled out the article about Dennis's passing and the stuff. I remember it brought back so many memories. I used to go over there I'd go from Pismo Beach to Bakersfield to pay him in gold for his service of, giving us when these things were going to turn and stuff like that. And it was always exciting, and I would go down 166, and the fun part of the trip is I would go through New Cuyama, which is a little town on the other side of the Los Angeles basin. Well, it's way north of the basin, but it's a beautiful area for agriculture, cotton farmers, and also for cattle ranching and stuff, with big farms where they had their own jets and stuff. It was really cool, and I had a really great customer there from the Drays back in at Drexel, Dr. John DiVincenzo, whose his son was a doctor in San Luis Obispo, and I would go over there and visit he and his wife as I went through, and she'd always have a big Italian breakfast for us. And then I would go on to see Dennis over there, and I remember some of the things. Dennis was a really big fellow. He was about 6'3". He weighed way over 300 pounds, and in his very small office, was just enough for two people. It was all computers, and there would be pictures of he was in the White House with President Reagan getting an award. He was the developer of the Tomahawk missile, and let's just you know, it was just really exciting to remember some of those things. He was very, very eccentric. He had a big safe there from Wells Fargo that he kept some certain things in that I never knew about. But on top of the safe, he kept a 45 automatic pistol, 1911. As we all know, it's a 45 automatic, and we'll see. Yes, Ruby, hang into the sugar. It still looks like it's going to go higher. Coffee's been moving very strongly to the upside, so that's it. If you remember yesterday, I'm just going to go through this briefly here because I've got to cover a few things that I think are relatively important because we're getting close. This was the forecast that we were looking at in the E-mini S&P yesterday. If you'll notice, we were saying to watch for a low around that 1145. And of course, that low came in very, very close to that time, and then it went up. Now, when you see the red line here, this line is all predicated on time, folks. It has nothing to do with price. Zero. None of the things that Dennis ever worked on had anything to do with price. It all was related with time, and the vibration that he was following was a 2-minute, time vibration that we had to work out over a very, very long period of time. So what we're going to do this morning is we're going to take a look at, what might be happening today, and I'll just bring this up to keep an eye on it because you remember we had a forecast for up and down yesterday, whereas today, we're coming into a totally different forecast that I think you'll be seeing. Now, the first thing I do is I check to see how the forecast worked in the European market overnight. And if you'll notice here, this is the European forecast. You had an up and a down, relatively pretty good move, and we're coming up into an area around resistance up around that 25.85. But that's not based on the time. That's just based on the price. This artificial intelligence that I use is all based on time only. It has nothing to do with price. It's hard to grasp that concept, but that is in fact the way it goes. So here's what we're looking at today for a potential forecast, and we'll take a look at it here. As you'll see, we should be topping somewhere between 8:30 in the morning, which has already happened, and the key time is at 10:30 in the morning, which is 1 hour after the open. So that is the place. If you're making a higher high or a lower high at 10:30 in the morning, that means that you're going to have or the suggestion is you're going to have a pretty strong trend down into the 1 hour or 2 hours before the close, and that would be a really good trend thing to use. Now, this is a short term, and remember, folks, it's only right some of the time. It's not right all the time. It's only right some of the time. And when it works great, and when it doesn't work, it's also telling you something that it is going to go a lot different than what you're expecting. So if you're higher at 11 o'clock in the morning and you still be, I don't call the chart anything. It's a neural network, and I just call it the neural net chart. Ensign runs them for me, so that's it. Oh, you want to give us the one that works all the time, Duffy? Well, let me see. I don't know what that one is. Well, it's just probabilities. Remember, it's all based on time, though. You never bet the house. You don't. Let's just take a look. See what this, just to give you an idea. I'll tell you. Here's how this all started. There's a vibration out there. If you see all those inputs that you're seeing there, the X1, XC, those are basically these price swings that you're looking at over a 30-day period in a 2-minute chart. And what it does is it tries to go into the future to see what it's supposed to do. Anyway, we'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I've posted the long-term weekly chart of Apple, and as you can see on the weekly, the 61% retracement came in at 146. We did get down to 142 when we had the announcement from China about the fact that there were a lot of problems with production and also sales in China, and then, of course, it's rallied a little bit from there. That's a very key figure to watch, folks. Anything below 142 in Apple would give us a really strong indication that it wants to go lower. Remember that Apple is basically a marketing company. You know, when they can sell a little tiny piece of cord that hooks onto your Apple computer and they get $49 for that. It's basically a marketing company, even though it's heavily involved in technology. That's it. And they've got billions of dollars that they've stored away from all this, so they're not in any trouble at all. But, you know, things can change. You remember what happened to, you know, the great stock of General Electric. My goodness, that was, you know, stock that used to be one of the greatest of all times. And, you know, it gave up the ghost and has gotten all the way back down to about $7 again, which is you know, not a very strong sign, you know, for you know, looking at you know, GE. So I don't think Apple, it might happen, you know, down the road, but you know, it certainly doesn't look like it wants to happen now. So these things do change, and so be prepared for it. Now, if you remember last week or so, when we were in early part of the year, if you'll give me 1 second, I'll get this up here so we can take a quick look at it. I want to bring the bonds to your attention because we are now approaching a very nice ABCD pattern right at the 78% level down here at 145.08. That's also a beautiful ABCD structure. And if you'll remember, in the early part of the year, we were talking about how the open interest in the Treasury bonds and Treasury notes was not increasing. It was dropping. That made the market relatively vulnerable. After that top came in around 148, we've now come down 3 handles. The rally back that we had on between the 5th and the 7th was exactly 382 at the 147.16 level, and that measures down to the 78% level at point D at 145.08. On this particular type of trade, you don't have to risk more than a half a point, which is $500 in bonds, to see if it is correct. Now, if we get below the 144 level, this is telling us that we've made a major top here in the bonds, and we're probably going to go, a great deal lower. Now, this is what it looks like if you're watching it on a longer term basis here in the Treasury bonds. You'll see that we went to that exact same move from 2017. We had a 7-month rally, and you can see here this has not been 7 months. This has only been 3 months. But we went from October into January, and it was the same rally high. In other words, the rally in 2017 was the same rally that we had then. And then if it starts to go down, you can see where we've got interest rates going higher. Now, that's what we think is going to happen. However, these patterns many times do fail. And if we get above 148 again in the Treasury bonds, this is telling us that we're going to be able to see if it's going to be going higher. We have a question, would I wait for an equal rally to sell ZB again? Well, you had your first level to sell it, which was up around that 148 and change. Right now, I'm looking at something short term that tells us we're due for a bottom. And so I want to watch this bottom, because if the bottom came down in ABCD format, the market, does repeat itself over and over again. So what I'll be watching for is the ABCD format on the upside. And if it's at a lower price than that 148 and change that we made last week in early January, that's telling us that we have a Gartley pattern. And Gartley said on page 222 in the book, whenever you see an ABCD pattern in a new bull market or new bear market, do those, because he said those will be your lowest risk opportunities to get in without risking very much. And he was certainly correct. We watched this pattern, a great deal. So these are just some of the ones that we're, paying very, very close attention to today, because they do have some, great probabilities associated with them. I had a special chart here for General Electric, folks, and I can't find it. I mean, it's very frustrating to me. This might be, that's not it. Oh, shucks. It was a really beautiful chart showing what happened to General Electric over the years and the ABCD structure and everything. And all I can tell you from memory here is that we have a really strong resistance in General Electric around $11. I know we're trading around 8.5 right now, but $11 is where we really broke down from before we went down to 6. Well, actually we got to 5. And but $11 is going to be very hard, I believe, for General Electric to get through, because they have some really serious problems on a long-term basis, and that tells us that we're most probably getting ready to see some more movement to the downside on General Electric. The problems that they've had over the years have not been faced, and that means that they're actually looking at something that could be, rather sinister. Let's take a short-term view here. I want to get this up here today. This is the short-term view of gold. It covers the last 10 days, and I wanted to get this up here. You can see here that we have a potential here today for a 135 pattern in the gold market. Now, we've got down as low as 1281 last night, so there's a possibility we could have a little bit of a rally in here up to around 1292 in the gold. Now, if it goes below that 1280 level, that is going to tell us that this pattern is shortened up, and then instead of making a Fibonacci retracement of 618 and 786, that we're only going to make a retracement of 382. But that's still a little bit early in the road, and we'll have to wait and see how it ends up today. But we do have a potential in the gold at that 135 pattern, which is, of course, the one that we got from Roy Longstreet and his brother Bill. Let's talk just a little bit about the crude oil, folks, because if you take a look at crude oil here, and well, let's do heating oil first, because this is the one I want to show you. You'll notice that heating oil made a 50% retracement of the low from July of 2017, and so that is a very important number. But it also made a 61% retracement from the low. Let me rephrase that, folks. It made a 50% retracement from the low in 2016 and a 61% retracement of the low in 2017. So that's it. Now, people, many people will say that, these Fibonacci numbers are all baloney because there's just so much going on with them. And I really don't know, folks. All I know is that I watch them and they work pretty good. I went to St. Benedict's School in Terre Haute, Indiana to do my grade school from the grades, 2 through up until the 8th grade. And I remember when I was in the 6th grade, those 3 years when I was in the 6th grade, I was really trying to learn those things. I was a straight one-legged F student. The only class that I passed with a B was Introduction to Petting and Why It Is Bad for Your Health. That was the only class that I was able to pass with flying colors. All the others, I was more interested in baseball, basketball, and other things. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I found that chart of General Electric. This is the monthly chart going back, 40 years. No, 30 years. If you'll notice the high that we made in 2000, that was the dot-com bubble. There is a really nice three-drive pattern there. It's sort of squished up on this chart because I'm trying to get a lot of data in. But the key thing is you'll notice the ABCD structure that finished in March of 2009. That led to a very substantial rally. We went from $6 a share all the way up to $32 a share, which was a 78% retracement of the high in 2007 and a 50% retracement of the all-time high that was at $60. So right now we're trading at $8.56, and if you'll notice the bottom of that 78% range comes in right around $11.50 per share. That's going to be a relatively hard area to get through. If it can get through, then there's a chance that General Electric is going to make it, but it's been kicked out of the Dow, replaced by Walgreens, so it's got a long way to go. And when you lose companies like JCPenney and Sears, it's a little scary out there, as they say in the trade. So we'll keep a close eye on this as we walk through and look at some of these. Now, someone asked a question by email last night as I give these numbers that I look at each day as far as whether they're, where I think the low or high is going to be. And folks, I really don't do anything really fancy at all. It's really quite, here, let me just show you, just give you a quick run through from where we were near the top here in this S&P. This is just a very short-term chart that I'm watching. This is a 4-hour chart. You'll notice that we had that 3 drive to a top pattern, and right around the equinox, we made a double top on October 1st, and then we had these big moves down. You'll see the little Gartleys that we had. You can see the 3 drive pattern, really beautiful. ABCD completed there on October 28th, and the market rallied from 2610 all the way up to 2820, 400 points. That was a 61% retracement. Came down, made a double bottom, went up and touched that high again, very close to 2820. We got to, I believe, 2810. So that was retesting the 61% retracement. Then we came down very, very strongly and made lower lows. And that leads us to what we're watching right now, and that is, what are we looking at here? You're right, Duffy, that the Deutsche Bank does look like Deutsche does look like General Electric, but we'll have to wait and see. Actually, Deutsche Bank looks exactly like Lehman Brothers. So anyway, you can see here we're getting up near this 26 area in the S&P, so that's going to be an area that should give us some pretty good resistance. Just before I go on to the next thing I wanted to mention, just take a look at the relationship here between Deutsche Bank and Lehman Brothers. You've got the Deutsche Bank is in blue, Lehman Brothers is in red, and Lehman Brothers went to zero. So this is maybe this is going to happen with Deutsche Bank. We don't know yet, but I don't believe that Germany is going to allow their flagship bank to go under. It'll be taken over. They're not going to allow to go under like Lehman Brothers was. Remember the Secretary of the Treasury during the time when Lehman Brothers was on the way down was the ex-CEO for Goldman Sachs. Who was their major competitor at Goldman Sachs? None other than Lehman Brothers. And so when they had a chance to save their only biggest competitor, what do you think happened? Well, you'll never believe it, but they let them go to the south side of the river, and down the tubes it went. They did salvage Bear Stearns at $3 a share. Okay, we're going to ask that we have some questions here from Mr. Z on the corn, beans, wheat, all this stuff. We'll be happy to do that in just a minute. But I wanted to finish that little bit of rhetoric about how I look at some of these things and predict what I think the lows and highs are going to be. Since we were talking about the S&P, what I'd like to show you here is on the, get the chart up. Take a look. This is really simple stuff, folks. This is not rocket science. You'll note that the low we made down there at that 2440, that was that really key ABCD pattern exactly at the 382 of the low that we made way back on December 26 when the market got to 23.15. That 382 retracement came in at 24.38. The low was 24.38 and a half. And then the market has started an uptrend since January the 3rd. You'll notice the first retracement came in on January 4th. Where was it? Exactly at 382. You can see it marked right there. And from that level, you made a low, which was around 24.60. You went straight up, and the next low was, guess what? Exactly 382 of the previous low. And it was an equal move down. That equal move down was a pretty substantial. We went from 25.55 down to 25.15, so it dropped 40 handles. And then yesterday, on the anniversary of Elvis Aaron Presley's birthday, what did we do? We dropped another 30 handles, going right down to 25.50. And what was that? That was a 61% retracement of the low that we made on the previous day. And so what I was looking at today is the possibility of the low coming in around 25.75. So far, we've hit 25.76 or 77 early this morning. Anything below 25.70 would tell me that we're most probably getting ready to have a larger correction, because between January 4th and today, we've moved 180 handles, and that tells us that we are extremely overbought and we're ready to possibly start a correction. But we still believe that we have a potential to get above that 2610 level, which is the ABCD structure on that big pattern that we just posted just a few minutes ago. I'll post it again just to give you a really good idea of what's happening. You'll notice that this is not rocket science. This is just, Fibonacci retracements and stuff, but you can see that Gartley coming in right around 26.25, and that would be very, very interesting to see if it's going to happen or not. But this is our biggest rally that we've had since the market topped on the equinox of the 21st of September. So we'll be looking at that very, very closely. Okay, let's move. Oh, we only got 1 minute to go before we do want to cover. We've already covered the. Well, we'll do it again. 1 second, please. We'll do it again because I think this corn is still a good buy where we are right now. We're trading at around 380 right now, and I believe that's still a good buy in that area. You'll notice here that that's still upward bias, and I believe if they announce something positive coming out of China, the people that have been short this market might be surprised. So we'll wait and see. Now we'll take a look here at get a little look at here at the head and shoulders pattern here in the soybean meal. We got up to 325. We backed off just a little bit, but this market certainly has legs to go to the upside. Anything below $300 would tell us that we're most probably going to be looking at something, a whole lot lower. And wheat, we're looking at pretty much the same thing. It's got a possibility of having a pretty good rally in here. Simon Only of Sylvia's Financial is certainly looking at higher prices in wheat, also in corn and beans. The main thing that we're going to be watching here is to take a break, pay a few bills, and we'll be right back. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I posted the chart of the sugar. You notice that we've had a pretty good run here. The one that's interesting now is, if you remember when we started the show, we were looking for this rally to be happening in the gold market, and this is exactly what we have now. We got gold back. Hold on one second here. Let's get hold on here. Let's get this up here so you can see that we've got this rally getting close to we're 1290, I believe, right now. So another couple bucks higher, we'll be at the 78% level, 1293, and that would complete that ABCD pattern. Now let's try it again, the 135 pattern. To how it's going. Please excuse any airs that I have today, folks. I've got this lousy head cold, and I've taken some medication for it, and not that I need an excuse to be lightheaded, but it's made me a little bit drowsy this morning. But anyway, that's an interesting one to watch in the gold market today, because if we get this thing above 1295 today, it could certainly have legs. And we're having a little bit of a move here in the euro. We've had a rally up to the 115.10 level. You've got to get the euro above that 116.40 level. That was that level that we made on the 1st of January that didn't show up on many systems, but that was an exact number. There was trading at that area because it was reported by CQG, and they don't make mistakes with data, and so that is a key figure to pay very, very close attention to. The Canadian dollar, we get a lot of people talking about that. We were fortunate enough to see this pattern that was completing here in the Canadian dollar up at that 136.60 level. We're now trading at 132.40. It's down well over 400 pips from that level. The problem is, we don't know whether it was where it's going to go on the downside. Nobody knows that. It keeps dropping and dropping. And the problem is, if you cover your short here and it keeps going lower, you're going to feel very ridiculous. And you don't have any reason to cover the short because you're not at any key level. The first key level comes in at 130, and that's down 6 handles from it's a $6,000 move in the Canadian dollar in just a matter of a short period of time. So watch that one very, very closely. It's going to be interesting to see it unfold. I think something that should be paid very close attention to. Now, we are hearing some information about Bitcoin, the fact that it's getting close to getting above the $4,000 a share level. The low on that was 3,200. The ABCD structure on this, going back to 2010, came in at 3,800, and it certainly has held that. I have not traded one share of the cryptocurrencies or blockchain technology yet, but I am watching them, and whether that's going to turn up from here, we'll have to wait and see. But it doesn't have any of the earmarks of a bubble. If it were a bubble, this thing would be trading at 500 and not at 40, not at above the 4,000. So that's another one that you might want to remember as you look at this. So we'll have a pretty good idea to see what's going on. The dollar is under a little pressure this morning, and there's always that possibility, folks. We got to be very, very observant here, because if you look at this long-term weekly chart on this dollar index, we ran into massive resistance up there at the 61% retracement at the 97.72 level. As you recall, we looked at this on the daily chart, and there were three tops there, all within equal times of each other at that 97.72, 97.50, 97.67, all very, very close together, and that was strong resistance, and that's what's happened. It sold off. It has not sold off very much on the weekly charts, because this happened, well over 2 months ago. And now, we've just barely come down to test that major support at the 95 level. Now, if we get the closing price of 95 on that U.S. dollar index, that's going to be a game changer. And that means that you're most probably going to see the market move a lot higher. In the euro, that means the dollar would most probably go lower. So those are just a few of the things that we're keeping an eye on here in the foreign exchange. The yen is still, trading in that 108 change level. It's still doing pretty much the same. The Australian dollar and the Australian dollar came out of death's door on that big day that we had on the January the 3rd, when they washed out a lot of stops. And the Australian dollar snapped right above that level after going down and taking out the lows of the last 4 years by just a little bit in a period of about, 1.5 minutes, whatever that level was that the Bank of Japan was playing games with. And then, of course, the Australian dollar has come back and put some strong numbers on the board to keep it from going higher. So those are the key things in that U.S. dollar, because when that happened, folks, it was a good way for them to rob the bank. And that's neither here nor there. You got to go through it, but this is why you have to use stops, and you have to be able to try to read from the technical picture whether you think there's major support there or not. And this is why I look at patterns and Fibonacci levels. They don't work all the time, but they do give you a pretty good idea. Sometimes more than better than others of where this buying and selling should come in. So this is something that we discuss here at TFNN. There's a lot of really good contributors. We got David White, we got Basil, Steve Rhodes, Tom and Tommy O'Brien. I probably can't remember all of them, but anyway, they got some really great information. Plus the traders that we have here inside TFNN, Mr. Z and Fletch and Dudette is doing a great job. And so these are some of the things that we're looking at. Regarding those numbers in the S&P that I posted, Jim Twentyman's always said, defy human nature, do the work yourself. Go look at the Dow Jones Industrial Average. That's simple for you to do. Go look at the low on, January the 4th, because that was the pullback. That was that 382 pullback exactly at an ABCD pattern in the S&P, 2438. Go look at that number of the Dow to see how well it did. And then, in order, if you want to even do more, go look at it on the E-mini NASDAQ or the Russell. Check it out to see how well these numbers work against this stuff. This is not rocket science. I'm looking at highs and lows. I'm calculating some ratios. They don't work all the time, but for heaven's sakes, they work a lot more than you might think. It's certainly, you don't have to wait for a 200-day moving average to see something happen. These ratios give you a pretty good idea that they're going to work spot on, and if they don't, you got to be out of there, because that's just telling you that it's not working. So that's really what you're, really watching. So we'll keep an eye on that. That's it. So we'll see. Well, bottom line is we do have a slight bearish bias today in the stocks, mainly because of what the prediction is saying. But remember, that thing is only right part of the time, and but the key times are what's interesting to look at. And the bonds. The bonds, we're looking at that 145.08. There's a big ABCD pattern there. Whether that's going to have any implications or not, we'll have to wait and see. Well, we've rallied up here in the bonds we just hit our price level in the, we just hit 1291, folks. That was a number we were looking for in the gold. So pay close attention, because we get much above that, it could be off to the races. Canadians moving again down, so we'll see. 877-927-6648. Remember that our guest on Friday will be Bill Cerubi out of Bill Meridian. Bill Cerubi is his pen name. Meridian's his pen name. He'll be our guest on Friday from Vienna, Austria. Right back after these few words.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of June hogs, mainly because you have to remember the old market adage is bulls can make money, bears can make money, but pigs will always lose. And not only that, but they'll get on the your porch and make it dirty. So pay attention, because you got to use stops in these markets. Hogs hit the exact 61% retracement at 80.85. We're now trading about 1 point above that. Going below 80.85 would be a sign that this is a failed pattern. And so the risk-reward ratio here is quite high. You're risking 1 penny, and you're at least your first retracement number, which would come in around 83, would mean that you've got a 4-to-1 risk-reward ratio. Here's the same situation here, like you say in gambling, but in gambling, you know, they decide what the odds are going to be, whereas in trading, you decide what the odds are going to be, and you decide, you know, whether you want to play or not. You could buy hogs right now, and by the time I finish this sentence, you could be out of hogs with a very, very small commission of around $3 to $5, and that takes all the responsibility from the gambling to you. You're the one that determines it. Whereas gambling, it's determined by the rules of the game, which you have absolutely no control over. So that's the key. The difference is that you have control when you're trading. You do not have that control with the gambling. And not only that, but the payoff in trading is far, far better than the payoff in gambling, because usually the gambling payoff is even money. They do have proposition bets where, you know, the payoffs are 20, 40, 50 to 1 and stuff like that, but those are rare events, and we'll have to wait and see if that is going to happen. Anyway, let's watch this. The gold got up to that 1291. Not missed it by about 10 cents. We're now trading at 1289.80, and Canadian dollar continues to move in our favor. There's a situation, folks, have no idea, you know, where it's going to go, but there is some strong support at the 61% retracement on the weekly pattern at that 160. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.